Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour with AI. The crypto winter is deepening, but the thaw is coming from unexpected silicon suppliers. Over 100 digital asset projects folded in 2026. $1.1 billion in treasuries vanished to exploits. This is a dot-com-style consolidation reshaping DeFi and Layer 2 networks. Survival now demands capital efficiency, not just innovation. Meanwhile, Apple is quietly rewriting its supply chain logic. The tech giant is testing memory chips from Chinese manufacturer CXMT for iPhones and MacBooks. This move addresses a critical AI memory shortage. Global supply chains are squeezing under demand. Apple's pivot signals desperation for alternative sources. It also highlights the fragility of current semiconductor dependencies. On the macro front, interest rate expectations are shifting rapidly. Traders have slashed September rate hike odds to just 45%. The market is pricing in a pause. July CPI data looms as the next major catalyst. Core inflation and services costs remain the key variables for Fed policy. Any surprise in the upcoming print could trigger violent volatility. Yet, equity markets tell a different story. The S&P 500 is showing hidden strength. For the first time in 4 years, the average S&P 500 stock is beating the index. This breadth signal reveals broad market resilience. Tariff noise and extreme bullishness are masking this underlying health. Investors are buying the dip in quality names. In related news, regulatory risks are emerging in AI finance. New research shows AI financial advisors can shift Bitcoin allocation by 5.2 percentage points based on prompt context. This creates significant audit risks for banks. Algorithmic bias is no longer theoretical. It is a tangible compliance threat. Financial institutions must audit their AI prompts as rigorously as their code. The intersection of artificial intelligence and digital assets is becoming a regulatory minefield. Banks must navigate this carefully. Looking ahead, the market waits for inflation data. But the structural shifts in crypto and supply chains are already here. The consolidation in digital assets will leave only the strongest players. Apple's supply chain diversification will continue to impact global chip markets. And the Fed's next move depends entirely on July's numbers. Investors must watch breadth indicators closely. The average stock performance is a leading signal. It suggests the rally is broader than headlines indicate. Do not let tariff noise distract from fundamental strength. The market is pricing in a soft landing. But inflation remains the wild card. AI bias in finance is the new frontier for risk management. Compliance teams must act now. The era of unchecked AI deployment in finance is over. Regulatory scrutiny will intensify. Banks that fail to audit their algorithms will face penalties. The crypto shakeout is a warning. Only projects with sustainable models will survive. Apple's move is a strategic necessity. It ensures continuity in AI hardware production. The market is complex. But the signals are clear. Strength is broad. Risks are specific. Watch the data. Adapt quickly. That's your market briefing. Follow Rumour with AI for daily market intelligence.